Sweet, we're on. All right. So when looking at any coin or any asset, you want to have a high time frame bias. So we look at this entire range. So from the high that gave us our kind of macro top currently on the daily. This is what I would define as the external range. So from this high to this low is our external range, and we're currently trading at a discount of that range. So if we were bullish and we were buyers, I would consider longing from below range equilibrium. What I saw as an area of potential significance as well, in terms of where liquidity might be resting, is the equal highs that have formed basically at range equilibrium. So that's on the daily, obviously. We're trading, so we've swept within this consolidation range. So within this range, I wouldn't count that wick because that's purely manipulative in my opinion. So within this range at the moment, we've already swept sell side, and we got a nice reaction out of the sell side sweep. So you could consider that price may go for this equal high. So now that we've framed this, we now start to strip the price action down and take a look at where at potential entry points, right? So we've got the sell side liquidity sweep, and we're anticipating that price could reach for these equal highs around range equilibrium next, because people are seeing that as resistance, right? People see that as a double top, and oh yeah, like we're gonna head down before we head back up because price is resisting. Like no, that's an area of built up liquidity, and price is probably most likely going to reach back into that area. Um, we have this bullish order block as well that price just kind of tapped into, and if we pull fibs from this swing low to this swing high, that was also range discount. So that's the internal range. Obviously this was the external range from this high to this low, and this is the internal range. So what defines a range is we have consolidation, manipulation, trend. So this isn't a defined range, this is just simply consolidation. We're not looking to pull fibs from there, we're not looking to define a range from within there. Unless you're scalping, that's fine. You don't really need a bias if you're scalping. If you're on the 1 minute time frame, you can use this sort of trading model, and it happens all the time. You can do it, it's the opposite for a bearish sort of pattern: consolidation, manipulation, trend. You can get in on a retest, continuation of the downside. This sort of model happens all the time, and you don't really need a bias if you're trading on the 1 minute time frame. So yeah, there's opportunities everywhere on the 1 minute time frame, and you can kind of get some fractal moves. So but we'll continue on what we were talking about anyway. So from here you can see range discount is the 0.5 of the internal range, right? We hit underneath 139.21 and kind of tapped that bullish order block. So what is a bullish order block, and what you define as a bullish order block? Um, it's it's a number of things. It can the most simple way to sort of remember it is by visualizing the down close candle followed by a displacement move. So you've got a large move from a downside move that breaks a downtrend, right, or breaks a trend. So and then you look to get in at a retracement into that order block before continuation. And then same thing, you look to get in at a retracement into this order block before continuation. And this is order flow trading. So this is how you can get in on the trend. You're not looking to like you can try to chase this momentum, but the higher probability setups is waiting for a retracement and getting into the order flow. Um, so with that in mind, um, that is the most simple way I can explain order blocks to you. There's obviously it can be a bit more complex. Like for example, what I was just showing you before with the consolidation manipulation followed by a trend, that is also defined as an order block. So you get a consolidation range, nothing's happening, what people call chop. This is the beginning of the order block, manipulation, continuation. So you get a sell side sweep, so everyone's sell orders are resting below there. They're thinking that that's support. They get swept out, forms an order block, and then continuation to the upside. And then we look to get in at a confirmed retracement, and then continuation. So that's an order block entry model. Um, this happens on all time frames. It doesn't just have to happen on a 1 minute chart or 1 day chart or etc. You kind of want to see price head down into range discount before hitting an order block and then potential continuation. Um, Hopefully that makes a bit of sense. Sorry to bang on. I just want you guys to understand what I'm actually looking at when it comes to um, Confluence to support certain setups. So why I think the equal highs could get swept now is because we hit range discount and then into a bullish order block, and we've seen an okay reaction from there. So we've already taken sell side. Again, this is internal range sell side on the 4 hour. So sell side here has been grabbed. And then we can kind of pull fibs from here to here. Does the wick of the OB candle count? I tend to use bodies. Um, when it comes to breaker blocks, I use wicks, but I don't include a wick like this because to me that's just manipulative price action, right? I like if it's a small wick, like I would include this wick potentially, but I do prefer to use bodies, and because this body of a 4 hour bullish order block, you can see the optimal trade entry range, so the 0.62, the 0.705, and the 0.79 line up within that order block. So they're our entry points: 142.76, 141.65, and 140.53. But so this one candle, so the one down close candle before a subsequent move to the upside so we head to the 1 hour. You can see that this is also an order block, which it looks silly, but it can be a cluster of price action. So it doesn't have to be just one down close candle. It just depends on the time frame you're setting up within and whether it's below range discount. So I would be looking for a long on Solana. You see here, this is what's considered. What the hell just happened? Where did all my shit go? Control Z, Control Z. Where's all my stuff? What's going on? Where's all my drawings? My bar's just gone. I'm not sure how, but with all my pinned drawings. But anyway, we'll just make it work, I guess. So here we see a market structure shift. Do we know why that's a market structure shift? Is because that's a pocket of price that was the last leg of the downtrend. We took sell side and then continued to the upside. So now the trend is looking like it wants to head up and take the equal highs, which is what we're aiming for. That would be the ultimate target. Damn, where the hell did my fucking favorite fucking drawings go? That's annoying as. Um, does anyone have any idea where the hell they could have gone? Because I wouldn't mind having them for ease of use and just to. Yeah, I'm trying to figure out how I accidentally hit it. Oh yeah, there we go. That's all good. Found it. So yeah, it Solana looks decent for a long, but so I would be framing it on the 1 hour. We see when you see a fair value gap with it's almost like a fair value gap within a fair value gap. So you've got an inverse. So you've got a fair value gap that was mitigated with this move to the upside that broke bearish price structure. We see price came down into range discount and it actually hit this breaker block, but I would love to get a bit more of a retracement down into 142.76, 141.65, and 140.53. Um, at the moment, I'd be keeping bias fairly neutral. We are still in a bull market, so uh, this move to the downside could simply uh, only be very short term before a move to the upside. My bias has been bearish for a while now, and we've been correct with that bias. But I do see a you never know in a bull market. You might get a move to the upside quicker than anticipated. So I'd be keeping your stop loss below the sell side sweep. So below this sweep, I'd be keeping the stop loss at just you can just round it off at 137 if you are comfortable with that drawdown. If not, I would keep it below this fair value gap. So price, it technically shouldn't break that fair value gap, right? It should simply mitigate it and then continue to the upside. But I like to have more of a protective stop rather than a conservative stop. And between this range and this high, between this low and this high, the sell side sweep, if price is truly bullish, it should continue to the upside to take some buy side liquidity. So yeah, that is a valid setup for Solana. So if you guys wanted to follow that and give it a go, I'm confident in that setup. I'm not going to call it on Pro Alerts. I'll try to keep these live stream setups exclusive for whoever's here. Um, just because I purely don't have time and I don't want to end up, you know, looking at 100 coins or even 10 coins that you guys request and setting pro alerts for all of them because it's quite easy to get swept in this current market. So um, I'm only going to be making setups that obviously I've taken the time to analyze and I'm obviously not talking about educational stuff to myself. So um, yeah, so that's definitely valid. We'll move on to Ondo. We'll head to the daily first. So if we pull from this low to this high to get an external range equilibrium. So we're currently trading at the premium of range equilibrium of the external range. What makes this an external range? Let's talk about that again, just in case you guys need a reminder. So you have consolidation. This is the consolidation. We're not trying to find a range within there. We've got the manipulation. So the manipulation was here, and then a displacement move to the upside. So this is an energetic move to the upside, and it's an important piece in price action because this is showing a willingness and a large amount of liquidity coming in. This isn't retail buying. This is definitely larger players and institutions making this move. So it's an important range, right? So we have range equilibrium established from this low to this high, so this energetic move, and we're currently trading at a premium. So if we're trading at a premium of an external range, what do you think institutions consider being sellers? So you've got a buy side sweep here, confirm move to the downside, right? So it's very clearly been up only as well. So um, there's obviously not a lot of data to go off, but they're going to be traders and investors going to be taking profits at some point, right? So there's not a whole lot to look at here, other than this actually looks like a sell model. So what you normally see with sell models is sell side sweeps followed by consolidation. So let's draw it, and it'll help you visualize what a market maker buy and sell model is. So this is considered the buy model. So this whole chart is considered the buy model that we're seeing right now. So we get consolidation, sell side sweep, move to the upside, consolidation, sell side sweep, move to the upside, consolidation, sell side sweep, move to the upside, and this is where it tends to top out around here. You'll see a larger consolidation leg. So this is what people refer to as a BART. You might have heard it before, but if not, it's a larger area of consolidation where people are starting to consider, it's indecisive. It's like, how much higher is this going to go? And then you'll see a buy side sweep and a move to the downside. And that's the beginning. So you've got the buy side sweep. This is the buy model, market maker buy model. So we've had sell side sweeps all the way up. Sell side was swept. Sell side was swept. You usually get a few legs here. And this is a higher time frame model, obviously. Sell side sweep. And then we get a longer pocket of consolidation and a buy side sweep, followed by a move to the downside. And then it's essentially in reverse. So consolidation, buy side sweep, move to the downside, etc. So this model happens everywhere. It happens on all time frames as well. And yeah, it's an important concept to keep in mind. So here, we'll look back at the chart. You've got, I'll remove all these drawings. So you've got consolidation here, move to the upside. This is the move to the upside, and then you've got further consolidation. You've got the sell side sweep, move to the upside. Sell side sweep, move to the upside. And now we have a larger consolidation move. We sweep buy side, and we could be starting a sell model now. So we could see something like this. Right? I know it looks ugly, but it's the concept that matters. So we see all through here, sell side swept, consolidation, sell side swept, consolidation, move to the upside, move to the upside. So it's indicative of the end of a potential buy model into a sell model. So with that in mind, I would be considering Ondo shorts. So you see here, this is an external range. So this on the 4 hour, this is an external range. We pull fibs, whoops, from this high. What the hell's going on? What is going on there? What is that? Oh, it's a vertical line. So external range, this high to this low. You see we traded at a premium here. We took internal range buy side. So this is the range inside the external. internal range buy side, and we hit a bearish order block and rejected. We failed to make a higher high. So we strip this down again. There's no indication that we're breaking any form of bearish structure. I'd be looking at these lows ultimately as a target. So if anything, you'd be looking at shorts on Ondo. You just see through here this whole internal range. There's no indication that we're breaking out of bearish price structure. So even these equal lows, they're very, very clean equal lows, and there's going to be sell side liquidity resting there. There's no setup here for me personally. I wouldn't be looking to trade any of this in leverage. But yeah, if you were looking to invest, I'd be waiting for at least range discount, right? So from this low to this high is the external range. So I'd be waiting for a range discount. We'll move on because yeah, there's not much, but hopefully you got a little bit of an understanding of what a market maker buy model kind of looks like. So USDT. Wow. Oh, I got old lines on here. I don't even know how old they are. So yeah, this shit's gone fucking crazy. Same sort of thing though. So buy model looks like people are obviously taking profits. It's in a distribution leg at the moment. That's the confirmed sell side sell model. So we got the consolidation, high sweep, move to the downside. So it looks like it's beginning a sell model, high time frame. There'd be quite a lot of liquidity resting below here. They're quite clean lows. So once again, I wouldn't be framing it. Yo, can you guys hear me? Hopefully you guys can hear me now. I don't know what happened. Obviously just had a DC. Can you hear me now? Sweet. Yeah, so it did fade. And I was anticipating that right. I kind of got in a little early on the Bitcoin short, but we redeemed ourselves today with this 15-minute intraday setup. So I saw the buy side sweep, um, and then a displacement move. We hit OTE, uh, and yeah, we got that fair value gap entry. The fucking boys. So yeah, that was nice. Obviously, Av did well as well. You can see that's our breaker block entry. We've actually hit all targets. So yeah, that was another nice move for the uh, last 24, 48 hours or whatever it is. So yeah, sell model HDF. I'm not looking to play that leverage. Go to Wild. I do enjoy Wild, or whatever the fuck it is, WorldCoin, or I'll just call it Wild. So we'll start on the daily. It's definitely had a bit of an interesting point. How the shitcoins looking seem to be pretty strong relative to the market today. I've been getting smacked on shitcoins recently, dude. I actually only trade shitcoins on my mobile, but we'll go to Dex Screener. I'll show you what I invested in earlier. Yesterday I invested in, it's called Raw or some crap. I'll let that load and I'll just continue with this. So obviously, oh cool, yeah, no sweet. I thought you were like talking like the full DJ and stuff. Um, yeah, so we just sort of missed the swing setup on P, but it hit range equilibrium on the 4 hour and just took off. And I was obviously looking for a discount, but is what it is. Shit happens. um, yeah, see, with Wild, I'm kind of concerned with the relative equal lows here. I wouldn't call it a sell side sweep. Um, we've obviously got what looks to be a bit more of, yeah. That's it's indicative of a buy side sweep to me. Um, that is just like yeah. As you can see, price is showing a bit more of a willingness to head down. There's definitely no bottom in at this stage. There's also not much to play on. I don't really like to try and catch momentum. I'm looking for a bit more structure than this. Obviously, we had a bit of a breaker block retest that we could have got in. This is also considered a breaker block, and you've got the fair value gap confluence, so you could kind of consider getting in at a retest of this area. If we pull from this displacement to this displacement, you can see optimal trade entry lines up with that area quite nicely. So you could consider a short from there, but your stop loss would be quite high. You If you wanted a conservative stop, you could set it at I'd probably round that off to 5.75 or even 5.8. Otherwise, if you wanted a way more protective stop, I'd have it at 6.35. But I don't like to play shorts in lower leverage. I only really like to, especially in a bull market macro, so I only really like to play 10x shorts. 8x you can kind of get away with on some coins, but like with long swings, I'm more willing to play 5x, 6x, etc. But yeah, so that's definitely a range you could consider entering in. So that could be an initial, and that would kind of be your final entry point. You could use the 0.79 obviously, so between 5.473 and 5.6 would be entry points to to kind of get in on the trend. But yeah, once again, it's just not something I'd be interested in personally. Um, that would have been the preem setup. So if we remove all this ugliness, you can see we got a perfect retest of that breaker block, and that's a clean buy side sweep followed by displacement. So that's why that breaker block is significant. So you've got the buy side sweep, displacement move, breaker block's obviously the previous bullish order block that formed this buy side sweep. So what makes a breaker block more significant, in my opinion, than simply using every breaker block is you want to see some sort of sell side or buy side sweep. So this broke and formed an engineered liquidity move to sweep internal range buy side, so short term buy side liquidity, and then we got a subsequent move that broke this trend, so broke this bullish order block, and continued in the intended direction. So these breaker blocks are more significant than simply using every breaker block, because we could have used this breaker block, right? This isn't, to me, this is not considered a breaker block. So you see price kind of violated that breaker block and hit this one, and the reason why it did is because this bullish order block didn't form the buy side. Well, it did form, but it wasn't the recent block that swept a buy side liquidity. Hopefully that makes sense. So you've got, let's draw it out. Might make a bit more sense. So you've got consolidation, manipulation, trend. So now this is the previous block, right? And then you've got a subsequent move. Oh god damn it, man! This screen. I'll try and do it from the top. So you've got consolidation, an order block forms, manipulation, sweeps buy side, and then a stronger move to the downside. So then we look to get in at a retest of the previous bullish order block. So sell side was swept here, bullish order block forms, sweeps, people expect continuation, so you've got order flow traders that try to get in at a retest of the order block, but instead we get a displacement move that breaks the order block, and then that's where we enter in. That's our entry point. So we're waiting for this to form. We're not simply trying to chase displacement. We're not trying to chase momentum. We're waiting for certain areas, for certain patterns in price action to form to increase our probability of setups playing out. So hopefully that made sense. But yeah, I wouldn't be looking at a setup on wild now. That would have been the setup I took. I would have taken the breaker block retest, right? So I would have taken that. And if we pulled from here to here, I would have been willing to scale into that optimal trade entry as well, which you see is a fair value gap. Alright, we'll move on. Yeah, so Peep, Floki, we'll take a look at Peep, or Pepe, or whatever the fuck we want to call it. So we've got, I was looking at a setup on Pepe, which I had in Pro Alerts, but it obviously timed out because it didn't tag in 48 hours. Interesting, so we've hit a new all-time high. Dang. Right now, I would be looking for a displacement move and a potential short. You can see obviously bullish order flow, high time frames been respected quite nicely. Retracements, continuation, etc. So what I would be looking for now is so once we see a liquidity sweep, we want to see a stronger move to the downside, a nice move to the downside, and then the beginning of laddering down. Otherwise, you can kind of obviously get in on the trend. This has to fit your HTF bias on the market as a whole, right? So right now, I'm not too interested in anything on PEP. Sell side sweep clearly. What's this again? This is turtle soup. So consolidation, sell side sweep, move to the upside. Consolidation, sell side sweep, move to the upside. Consolidation again, sell side sweep, move to the upside. Yeah, it's pretty crazy how that's how Pepe's playing out, but I'm not looking for anything on it personally. Yeah, the play for me is already, the entry points for me have already played out. Right now it's just in kind of up only mode, and you can try and catch the momentum, but it's of nothing of interest to me personally. I'm just going to let it do its thing, and hopefully we see some form of retracement that can present us with some entries, or hopefully we see some sort of displacement move after a buy side sweep to give us some short entries. But yeah, so have a look at Floki. I'm guessing this thing also chatted. Yeah, damn. So another example of order flow. Order block respected. Order block respected. I'd be looking at these relative equal highs as the target, because after hitting those relative equal highs, we're looking at a bearish order block retest. It's already been tested, but we've also got a sizable one up here. So yeah, you could consider trying to get in on the trend long and looking at so that would be our ultimate target, right? The relative equal highs, which we're almost at. So I'd be personally kind of looking at a bit of an intraday setup on this. You've obviously got the inverse. So here we sell side sweep, and we got a nice reaction to the upside, which broke bearish price structure, right? So that's the recent downtrend that was broken. And yeah, those highs are nice and clean, so there's definitely liquidity resting there. It's a bit hard for me to gauge a potential entry point other than if we pull fibs. You can see this fair value gap lines up just below range equilibrium, so you could use that as an initial entry point. So I would be looking at, and this fair value gap's significant because what did we get? We got consolidation, sell side sweep, manipulation, continuation, turtle soup. I don't know why we call it turtle soup. It's the fucking dumbest fucking name of all time, but that's what it's called. So this is telling us that it's we've got a willingness to go higher, and we should be drawing, liquidity should be drawing to the equal highs next. I'd be using this fair value gap as an initial, so 0.00017929, and then your layered entries are at that optimal trade entry range. So I'll leave that screen open if you guys want to set limits. It's completely valid in my opinion. So the reason why it's valid, why do we think it's valid, is because we saw a clear willingness for price to reach higher. We saw confirmed bullish order flow on the daily. We now see a break in structure on the 4 hour of bearish structure. So this is the internal range, obviously. And yeah, I'd be obviously waiting for a retest of range discount and potential continuation to the upside. So structurally, there's not much going on the lower time frames for me to want to take an entry here. I'd be waiting for the 4 hour and considering a swing long. So yeah, we've got Floki done and dusted. There's a bit of a swing set up there. Yeah. You've also got the inverse of FVG here that lines up really nicely with this recently formed upside fair value gap. So they tend to be respected. So whenever you see a fair value gap, look to the left as well, and if there's one inverse, you can definitely consider that as a point of interest in terms of where price could draw to. So your stop loss would obviously be at this sell side sweep, and yeah, go for it, homies. Yeah, render, sweet. All right, we'll have a look at RNDR. I don't mind trading this coin. It's usually quite structurally fun to trade. So if we want to find an external equilibrium, range equilibrium, obviously we're trading at premium. We're seeing a reaction to the downside from premium. Obviously that's a bit of a buy side liquidity grab, internal range buy side. Another sort of looks like the beginning of a sell model. Obviously, this would have been the beginning of the buy model. So here you can see consolidation, again sell side sweep, move to the upside, consolidation, sell side sweep, move to the upside, consolidation, sell side sweep, move to the upside, consolidation. This is what I mean. It happens everywhere, my dudes. It doesn't have to be perfectly clean for it to be considered a buy model. Sorry, how do you make your trend line horizontal like that, by the way? You just hold shift. So obviously I've got my trend line. If I'm like this, if I hold down shift, it just straightens it. So if I'm going across and I hold shift, it just straightens it perfect for you. But yeah, so same thing. It's ugly, but you've got a consolidation and bit of a sell side consolidation, but move to the upside. Same thing again, consolidation, sell side sweep, move to the upside, and this looks like the beginning of a Remember what I said, when a sell model begins, you tend to see a buy side sweep in a large consolidation range. Oops. So the large consolidation range, buy side sweep. We've now got buy side sweeps. What did I say before? So consolidation, manipulation, trend, consolidation, sell side sweep, trend, consolidation, sell side sweep, trend, consolidation. This could be the beginning of the sell model. Buy side sweep, trend, consolidation, buy side sweep, trend, buy side sweep, trend. Hopefully that makes sense, my dudes. Sell side sweep, sell side sweep, sell side sweep, buy side sweep, buy side sweep, buy side sweep. If you look at this, these models happen on all time frames as well. It's not shackled by a single time frame. Those models happen everywhere. I love to trade. I love to see this followed by a sweep in liquidity and a trend. This, to me, this is when I start looking for entries, because this is when the big boys are coming in. This is where you can make big money. Fuck the ranges. Like, you don't even need a bias trading ranges. Just go on the 1 minute. You can trade fractal shit. Like, you don't need a bias to trade fractal. So if you were looking for shorts, you've got a buy side sweep there. You've got a fair value gap that forms afterward. That could have been your entry here. You don't need a bias for that. You can just simply set a stop loss at the buy side sweep. Look again at the fair value gap, and you'd obviously be looking at these lows as targets. Low, low. Obviously we pumped these lows, and that's fine. That's why we leave moon bags. But yeah, you don't need a bias to scalp the 1 minute chart. And we will be going over that on Friday. I'll be doing a scalping session. Obviously I won't be setting any pro alerts because it's very fractal, it's very fast price action, so we'll be just doing it live. If you guys want to follow along as I trade live, you can do that. But yeah, you also don't need big moves for to make money scalping. So what time would that be? I'm free all day on Friday, so probably I wouldn't mind a little bit of a sleep in, maybe 8 a.m. my time. So it's currently 6:36 p.m. my time. I'm doing this after work today. So yeah, any time around 8 a.m. I'd say. I'll confirm it on Thursday though, so it's Tuesday today, so in a couple days I'll confirm what time I'll be doing it, and maybe make an announcement. But yeah, so I want to be trying to cover some other topics other than chart requests and doing drawings. I'm thinking of writing up a bit of a syllabus, and we can go over educational content as well, more in depth. Hopefully you guys can sort of understand some of the things I'm trying to explain, such as order flow and order blocks, the trading models I use like Turtle Soup, what defines a trend, what's an important range. You're not simply looking at order blocks and fair value gaps and buy side and sell side liquidity sweeps, and you're not trying to trade every single one. There has to be confluencing factors to support the trade. So it kind of all needs to multiple concepts kind of need to mold a single idea, right? So there needs to be multiple confluences to support your idea. It all kind of needs to line up. It's like the stars aligning, right? So um, yeah, it's you're not just looking at fair value gaps and going, oh, I'll enter there, and you're not just looking at order blocks and going, oh, I'll enter there. There has to be other confluences to support the idea, and we can go over that as well. Um, Peter, why aren't you gonna make it, brother? I want you to make it. You'll be good, bro. You'll be good. Promise. um, yeah, if no one's got anything else that they want me to look at, I might end the stream here. I still haven't had dinner, so just thought I'd do a quick chat request. Hopefully, you guys learned something as well about market structure and how it tends to move. Yeah, hopefully you got something out of that as well, like the buy model and sell model explanation. Um, but yeah, I'm very firm on the belief that we get consolidations like this, followed by manipulations and then displacement moves. Um, you'll see this everywhere on lots of different time frames, and the inverse for bullish, right? So consolidation, sell side sweep, continuation. This is what I'm simply waiting to see price move like this. So that's a confirmed trend. This shit isn't a trend. That's consolidation. You got manipulation, sweeps liquidity, and then a move to the upside. Now I'm trying to get in on the trend, right? So patience and timing is also very important. Um, and yeah, you're not just trying to trade every order block and every fucking fair value gap that you see. They're not all significant. They might be significant in some stage. Here we go, RNDR. We're getting a fucking move to the downside. Let's go, boys. So this is a model I like. This is a model I like. We might actually get a trade here. This is fucking great. So you've got this internal range. So this is an external range. External range from this low. That's our external range. We traded at a premium within the range. I'm going to get rid of everything else other than that. So external range on the hourly. What did we get? A buy side sweep. And we've got the energetic move to the downside. So what's that telling us? It's telling us that price never wanted to go up, and it's the willingness was to sweep liquidity and then make another move to the downside in the intended direction. So this is fucking vicious. Randa's getting smashed. Holy shit! What the fuck's Bitcoin doing? Oh yeah, we're all good. But so now where would you look to get in at? Can any of you answer that? No, you would not look to get in now. So we've got what? What was I just talking about as a potential area of interest, as a point of interest? You've got the inverse plus the recently formed fair value gap. You've got what? A breaker here, just above. Yep, beautiful. You could get in at this breaker if you wanted to be more conservative. But these are all areas of interest, right? You could start layering in from here. So layer an entry in at 10.342, and then I would layer another one at 10.575. This is why I layer entries, because I'm not looking to snipe shit. I'm not looking to fucking find bottoms and tops and perfection. We're simply looking to trade and get in on the trend. We're looking for high probability. We're looking for what's more probable than not. So I'd be looking to get in at those price points. Personally, I would wait at an initial of David, you were right, which is great, but I'd be waiting for an initial of this inverse plus recently formed fair value gap retest. Um, this is definitely a valid setup, so you could consider those price points. I won't alert it. We'll keep these exclusive to live streams, so hopefully more people feel like get that FOMO going. We, hit big boy numbers on the amount of people that watch. But yeah, that's a valid setup. That's a valid setup. So what did stops at the lick sweep above ACC to your system? What's ACC, bro? According. Yeah. So that would be a protective stop, right? 11.489. It should, if price is truly willing to make a move down, it shouldn't break that buy side sweep, right? Because price broke above the internal range liquidity and intended and moved back down in the intended direction. So this is telling us that price wants to move down ultimately. It's not showing a willingness to move up. This is proof that it was simply a manipulation move. Obviously, we hit a bearish order block as well within the external range. So this is telling us that that price wants to make a move down, and if it wants to move up, it shouldn't break the buy side sweep. It shouldn't break the buy side sweep if it's bearish. If it does want to move up, then by all means it will break the buy side sweep. But that is your protective stop. So that's your protective stop. That's the safest stop you could make in this for this setup. If you want something more conservative, you would have your stop a little bit above the fair value gap. That's the initial entry point. But I like more protective stops. That's fucking disgusting. Wow. But I love this shit. I love trading this model. So we've got an internal range buy side sweep, followed by the external range bearish order block retest. And look at that displacement. This is telling us that price wants to move down, not up. You're not trying to fucking catch a bottom here. Like, you're off your damn head if you're trying to long this shit here. Like, this is telling us that price wants to move down. Look at that energetic move. Look at that sell-off. That's not manipulation. That's big boys selling off. So we're now trying to get in on this trend, right? Retest, continuation. This is part of the external structure. So hopefully that makes some sense. I'll leave this open for you so you guys can set your limits if you do wanna make this setup. Otherwise, obviously don't. But this is a model I love to trade. This shit looks like it's just gonna fucking die from here. It's about to hit sub 10. So that's fucking crazy. Do we hit any? Apparently we haven't hit any more targets, short targets. The bot's been acting up a little bit recently, which is fine, I guess, but it's also a little bit annoying. But anyway, yeah. If no one's got anything else they want me to look at, I'll end the stream here. Yeah. Yo, sorry, my headset just fucking turned off again for some reason. Bonk. Okay. Shit. I don't really trade this shit much, but it does move like crazy. Start on the daily. Yeah, it's looking relatively bullish, but does it fit my bias? No. I do think Bitcoin's kind of primed to go lower. So you got these equal highs. So I'd be looking at that as an area of interest for price to draw to. Um, we've already taken this range sell side, right, and we got a nice reaction to the upside from there. So I'd be looking at those highs as a potential area to target if you were going to long. I don't know, it's just not very pretty for me. Personally, I'd pull fibs from here. You got optimal trade entry range, so we want to be buyers at a discount, right? Um, yeah, you could set limits at 0.000 fucking 3,000 zeros. I'm just going to say 0.2295, 0.2261, and 0.2228. You could consider being a buyer. Um, what was I talking about just then? The fair value gap with the inverse lines up with our final entry. So we don't want to be buyers up here. We want to be buyers in a discount. So if you were considering a long, I would consider the long within this fair value gap kind of retest and the inverse as well. I'd be keeping your stop very tight though, so below this low. No worries, mate. Yeah, those equal highs, that's where liquidity is most likely resting now. So we've swept sell side. This is what I've been talking about this entire stream. Consolidation, sell side sweep, trend, consolidation. We could see a sell side sweep. So what would be the sell side? This would be the sell side. We could see the sell side sweep into discount, tap into the fair value gap, hit optimal trade entry, continuation, target the highs. So that's definitely a valid setup as well. So yeah, I'm gonna go have some dinner. Hopefully you guys got something out of that. It's always nice to stream for you guys and kind of vocalize things rather than typing everything out all the time. So yeah, all good, no worries. I'm just hoping you guys get something out of this because I don't want to be talking, I don't want it falling on deaf ears. I try to explain the concepts as simple as possible. They can get quite complex, which is why I'm thinking about doing a educational series on the concepts. Sweet, I'm glad it does because otherwise, obviously, I'm wasting my time and I'm wasting your time. So, um, yeah, sweet cosmic. Yeah, no, I'm definitely thinking about doing it. So obviously, I want it to be structured and of true value to you guys. I don't want to just be doing everything off the cuff. So I do want to write up a syllabus. We would have structured lessons where we go over certain topics. You know, we'll spend a fucking hour on order blocks. I'll kind of condense them into 30 to hour long episodes. And then we can, by the end of it, once we go over all the concepts, we'll kind of tie it all together and go over the trading models that I use that kind of tie all the concepts together. So yeah, hopefully you guys would be interested in that because I think that it could be very, very beneficial for people that do take it in. Jodes has already done quite an interesting series of lessons on similar concepts, but I think um, we've all got different things to add to the concepts, and hopefully you guys can learn something as well from anything that I do decide to teach. But yeah, so I'm going to end it here. Um, have a good one, legends. I'm going to have something to eat and safe trading.